I know you guys have been wondering about the best time frame to use when it comes to forex trading, and at the same time I know you guys have been confused. There are a lot of time frames and you don't even know the right one to use. But in this video I'm trying to be breaking down the best time frame to use and the reason behind all these time frames. Alright guys, before I dive straight into the nitty-gritties of this video, I want you guys to do me a favor. Make sure you hit the subscribe button. At the same time, I'm Real Light Forex. With that being said, let's dive straight into today's video. Alright guys, welcome back. I believe by now you've already know that we have a lot of time frames, starting from the monthly time frame, the weekly time frame, the daily, lower time frame as well, 1 hour 15 minutes. We have a lot of time frames, but I know you guys are confused to know the exact time frame that suits you to use, or the best time frame for you to use to make good money off of it. I'm going to be revealing them right now, so make sure you stick from the beginning of this video to the end of this video so that you don't miss any part of this video. And by the time you finish watching this video, you'll be able to figure it out on your own, the best time frame that suits you the most for you to trade and to be profitable as a forex trader. It doesn't matter whether you're trading in forex, crypto, indices, or stock, or even metal, that is gold. So it doesn't matter any pairs you are trading. So what matters most is that the best time frame to use when it comes to trading the financial market. Okay guys, I want you guys to know that all the profitable traders you guys are looking up to, they normally used to identify or analyze the market on the higher time frames, even though you're seeing them trading or placing trades on the lower time frame. What I mean by higher time frames are the 4-hour, daily, weekly, and the monthly time frames. While from 1 hour downward to 15 minutes or 5 minutes, that is your entry. Guys, I know you guys don't really know deep about this thing, but I'm going to be breaking down from the monthly to the 15-minute time frame what they are meant to be used for. Okay guys, let's start with the monthly time frame. That is crazy, right? You can't trade on the monthly time frame. The candles are very big. One candle on Euro USD can worth about 1,000 pips, and you can't trade on the monthly time frame. But what are you going to be using monthly time frame for? Monthly time frame is the almighty formula, guys. Monthly time frame is the overview of the market. So monthly time frame is the overall trend of the market or the direction of the market, but you can't trade it just for you to analyze the market. Is it heading south or west? Is it trending to the upside or is trending to the downside? You can't trade it, as I said earlier. But when it comes to the weekly time frame is when you're going to be plotting your key levels. What I mean by key level, your support and resistance, spotting your chart patterns as well, a double top, head and shoulders, inverse head and shoulder, a lot of chart patterns. You also want to be spotting them out on the weekly time frame. Also, you can't trade the weekly time frame; it's too big. But there are other time frames that you can trade, such as the daily, 4 hours, and 1 hour below. But what I'm literally explaining is that weekly time frame is for you to spot your key levels, your chart patterns, and it must also align with the trend on the monthly time frame. And after you've know your trend on the monthly time frame, you've marked your chart pattern on the weekly time frame, scale it down to the daily time frames. What do you want to do on the daily time frame? Daily time frame is the time frame you can literally trade, because the candlestick are not as huge as the weekly or the monthly time frame. So on this daily time frame is the intermediate trend within the overall trend. So daily time frame is when you're going to analyze your trend, at the same time spotting your levels where you want to be buying or you want to be selling. And you come to the 4-hour, guys. Let your 4 hours to also align with the daily, the weekly, and the monthly as well. So 4 hour, guys, is literally when you want to be entering the market. The 4 hours, the 1 hour, the 30 minutes or 15 minutes is literally where is the time frame you literally want to be entering the market right now. So on 4 hours, especially on 4 hours, you literally want to be looking for your bullish engulfing, your confluences, to enter this trade, or you should not. But 4 hours to the downward to 15 minutes is literally where you want to be entering your trades. And guys, I want you to know that 1 hour downward are not as strong as the 4 hours or the daily time frame. So what I mean is that the higher the time frame, the better. So if you trade the 4 hours trend, you're gonna make money than you trading the lower time frame like 1 hour downward. I don't mean that you're not going to make money on the 1 hour downward, but what I mean is that the stronger the time frame or the higher the time frame, the better. So guys, I want you guys to focus more on the higher time frames, because the higher the time frame, the better. I want you guys to be trading quality over quantity setup. So the higher the time frame, the better. 1 hour to 15 minutes are for entries, guys. Entries, what I mean by entries is the reason why you want to enter the market. It may be bullish engulfing, it may be change of character, it may be shift of structure, a lot more. So I've literally published a video concerning market structure, entries criteria on this channel. So if you haven't watched it, go for it and watch it right now, because you're going to learn a lot more. And guys, please, if you find this video so helpful to you, don't hesitate, subscribe to the winning team. So make sure you be a part of this community and share this video as well. And with that being said, I'll see you guys in the next one.